Now, FedEx shares were under pressure last week after the company announced poor preliminary results. The EPS was US $3.44 versus expected 5.10 earnings per share, and the company also withdrew their forward year 2023 earnings guidance. And with the announcement, the shares were down 11% after market, but you can see here at the open, they were down over 20%. So the company is going to defer staff hiring, reduce flight frequency, consolidate sorting operations, and reduce Sunday operations. But the CEO said that global volumes declined due to macroeconomic trends, which were slightly worse later in the quarter, with both internationally and in the US. So will the enacted measures to support FedEx shares actually lift FedEx shares higher from here? Now, just take a look at the seasonals. You can see that seasonally, FedEx has a pretty strong period between sort of the end of September-ish heading towards the early December time, with an annualized return of over 60% and gains in 33 out of the last 44 years. So will this big dip in FedEx shares be bought over the next few months? Now, the major trade risk here is, first of all, that the global macroeconomic outlook continues to worsen, and that weighs on FedEx stock. The other outlook to be aware of is that if the Fed announce a pause or slow down the rate of hikes, then we could see FedEx recover much more quickly. Remember, HYCM clients can access the SeasonX product in order to analyze over 25,000 different currency pairs, indices, commodities, as well as individual stocks. Please do contact your account manager for a free trial to get started right away. Certain products and services mentioned herein may or may not be available to all clients, depending on which HYCM Capital Markets Group entity their trading account adheres to.